Hello and welcome everyone to another weekly market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hello, everyone. And, I would like to say in advance, Happy New Year as well.
Yes, no, absolutely. Let's. This was one for the books of a year, right? So let's see how 2021 gets started with. But lots of changes in politics as well as in hopefully with the vaccination moving forward over the next 6 months. We'll probably have a clearer picture on what that all means. Freddie, from last week, we got quite a lot of questions. So let's today just address those questions because I think we kind of will be talking about the general market anyways by just going through the questions. So let's start with the first one. It was asked, and the question is, any way for us to invest into ARK ETFs through the StashAway platform? So is there a way for us to do that, Freddie?
Well, we constantly look out for, more differentiated asset classes to bring them in. We don't think about funds first. We think about asset classes, and then we think about the funds that will track them to bring them into the portfolios. ARK is and has been on our radar. But the nature of ARK is active, so they don't have an index where they are benchmarked against, but it's a very remarkable fund run by Cathie Wood and the teams of analysts that looks at innovations. So we are tracking it in a sense, and we are. And one of the challenges of including ARK is that it does not have an index to look at. And if you want to extrapolate longer into the economic cycles, like going back a longer time period to try to gauge expected returns in different environment, that it tends to be challenging there. So we're sort of doing. You have to do a lot more groundwork. There's also style drift that we are trying to analyze. If the early days of ARK, when they didn't perform so well, versus a standard tax select ETFs, if we can explain those style changes. And it has a great year this year, but we're also trying to gauge the impact of whether their popularity will compromise their returns. As you know, one thing that can happen to fund managers are when they get big, and if the methods of investing is going to be constrained by the size factor, we need to evaluate that as well. So because it's an active fund, a lot more has to go into evaluating the ARK funds, but it is actually on our radar with a lot of curiosity.
Great. Next question, Freddie. He's asking about the US stimulus, right? So does the US stimulus package cause advantages or disadvantages to the investments in US equities or the US market going forward?
Wow, this package came a bit late and a bit too small, and still bickering about the amount of paychecks for individual. So we may actually see more. So I'm going to look at the question as saying uh, a series of packages, right? Potentially. If that happens, it does help consumers tie things over while waiting for vaccine to be fully delivered. And that's the challenge for 2021, where we need to manage the current wave of infections while waiting for the good news to be shot into your arm. And so it will, hopefully we see more. But what it does to the US based asset is that it may debase or devalue the US dollar further if more is to come. And so as international investors, we need to take into account of that potential devaluation. So if I want to buy something in the US and if it's going to be depreciated another 10, 20%, is there something else better with a different geography? So that I think that's more like the answer to the question.
No, absolutely. Especially now that they are even, I think, in the House, it already passed, right? Or in the Senate, that they're going to increase the payment from 600 to 2,000 to the individuals as well, right? Freddie, building up on that, there's a different question from someone else as well, right? Going into that same direction. And he's saying, hey, Freddie, what's your view for the US currency in 2021, right? After the 900 billion stimulus package, meaning US is printing more and more money to support the economy, right? And yes, obviously now, maybe the increase in payments to each of the individuals as well. Well, yeah, what's your view then on the currency? I know you said there might be more devaluation coming, but do you see this coming?
This package is not, it's already priced in. I think that's what Philip is also alluring to. It's already priced in. The US dollar you see today is the US dollar that reflects fully all available information with that package. In fact, we have to think beyond the 900 billion. What's the ability of the Biden administration in pulling through two parties together to work on more packages? That remains an unknown. So it's really difficult to forecast the immediate, is there any further depreciation in the US dollar? And in fact, since we all are bracing for a depreciation, just any small hint that new packages are going to be pushed out would make the US dollar bounce against our views by surprise. So that's how that's how annoying the markets could be. But if you think beyond the immediate, yes, the risk is towards more depreciation. But by saying that, I'm making the assumption that Biden will pull through more packages.
Yeah. And then last question for today, Freddy. I think it's very timely question that the person is asking. This is actually about Alibaba and the China crackdown on Alibaba, especially knowing that in China, the high rate of conviction is usually it's at 99.9%, as the person alluded to. And obviously this week we've seen it, right? I think, Alibaba shares have been punished quite a bit, right? I think back-to-back days of, almost 10% negative days. Obviously still very high from IPO levels, but where do you see this going? And is this just a slap on the wrist, or you see more, headway coming there?
Well, there's a lot of rumor, but the truth is that the fintech part of Alibaba was, and financial was the probably the one causing the problems, and it's, I wouldn't say it's related to rumors, but I just want to focus on what the regulators want to do. And when you look at the details, the ecosystem in China never really started with adequate or at all most basic regulations on the risk, right? I mean, like if Ant Financial is going to go IPO and be bigger than before and taking more deposits, doing payments, taking deposits, giving out a lot of high yield for parking money with them and all that, why are they not regulated like a bank? Because like any other deposit taking institutions, right? And so there's also concern that by Alibaba for years has been losing money. No, so M Financial has been for years losing money on payment on purpose to finance their expansion into, user acquisition, but to gather people onto a place where they can offer wealth management services, insurance services, and a variety of other services. But as you know, money losing proposition compromises balance sheet, right? If your capital base is not, it has to be evaluated like a bank now because you're that big. So I see that regulators more focused on risk management before they allow it to happen, and two, also on the leveling the playing field for the smaller player because it's always been dominated by China is always dominated by a few kingmakers in each area, right? So I think the prod would not just stop at Alibaba; it will widen to every other tech companies in China. Um, and it will be or have to be objective, it's not vindictive. So I'm not worried, but it is a headwind in the near term. Larger requirement for capital will sort of slow down the growth rate, right, for this firm as they restructure to the demands of the regulators. So in the case of Ant, it may have to sort of form another company to warehouse other services outside payment from it, and those other services will have to have the same regulatory standard, capital requirement, governance, and audits as a comparable banking institutions, right? I think that's only fair to us. And hence, someone may argue that you may not see as high a turbocharged growth rate that we have seen so far. But in return for safety and long-term health of the ecosystem, I would say well worth it. And in fact, I see that as an opportunity for StashAway users because as these things are not heating up, it's now suddenly, having a few more requirements, but they're ultimately great China technology investments over the long haul. I think that's fantastic for the dollar cost averages like ourselves keep deploying our savings and keep investing into something on dips. We don't want to always buy high and sell higher. We hope to buy low, sell high at some point, right? So this is one of those opportunities about to open up, in my personal opinion.
No, great opinion, Freddie, and I'm completely with you on that, as we've spoken to about before as well. But so for everyone, we will be back in the new year. So next week when you see us, it's already the new year. We will have some exciting new webinars coming up and in-person events, hopefully soon again, as well in 2021. But Freddie, as some final parting thoughts, especially since next time we speak, we are in the new year, as I mentioned. What are some of the lessons then, or one of the lessons that you think you have learned as an investor in going through 2020?
Number one, reading the news, social media or not, but like being bombarded to so much stuff going on, that's not help investing. So that's number one. Learn to tune out the noise, and perhaps out of 1,000 things you read today, you find 5 things that matters. So be very have some high standards in their filtering. If you can't do that, number 2 is important. Risk management starts from day one. It's always easy to sort of look at an asset class and saw it, exploding in returns and getting the fear of missing out. That it's very easy to succumb to that. But just always go back to your financial plans and say, hey, what is my natural risk tolerances? By investing in something, am I increasing my risk beyond my target? What do I have to do to bring my overall portfolio back in line? So I think that number 2 is really what keeps us safe and resilient and successful over the long term.
Absolutely. No, thanks for sharing that, Freddie. So again, everyone, thank you again for listening to us all year long. We hope we've provided some valuable insights for everyone. So if you have any comments or concerns or any kind of feedback for us, always feel free to put that in the comments below so that Freddie, myself, and the team can pick that up and constantly improve ourselves and answer all of your questions over time. So with that being said, wish you all a happy new year, and we'll be with you again both next week. Until then, bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.